Welcome back to the channel, guys. My name is Juliuz and I'm watching the best videos of the trading industry, so you don't have to do it alone. Today we are reacting on the first day of Ross Cameron's new small account challenge. So this is the first episode. Last time we watched the introduction video where he explained like his strategy and which software to use, etc, etc. So basically everything you need to know to start trading stocks. And today is the first episode. We just had a stock go up 5,000% today. If he's able to capture only a little bit of that in his $2,000 small account challenge, then this would for sure be a pretty big profit. So let's get right into it. I'm interested to find out how it went. Let's go. And don't forget, do me a favor and leave a sub and a like real quick below. It's just like 5 seconds of work and it helps me so much. Thank you for your support. Now let's enjoy the video together.
What's up, everyone? All right, well, today is day one of my brand new small account challenge of trading in a $2,000 account using Charles Schwab as my broker. And it couldn't have come on a better day.
I have this theory that people who work really hard get a little luckier than others, okay? So Ross is a very good trader and he's working really hard. So therefore, maybe he's lucky that he's starting his small account challenge on a perfect day. Okay, this is my theory, and others who are a little bit lazier maybe do not have the luck on their side. Okay, let's continue.
Right now, we have a stock up 5,465% on 272 million shares of volume. Holy smokes, this is unbelievable. So, as you may
How much was he able to capture?
have recalled, I said that I expected, once the pattern day trader rule was removed, that we would see volume come into the market, and boy, have we ever. So today, being the first day that I was able to day trade without the restriction of the pattern day.
This is the reason why he's starting the challenge on this day, okay? Because like this restriction of a minimum account balance ended on this specific day.
Trader rule for the first time in more than 25 years since the rule was first implemented after the dot-com bubble on February 27, 2001. I was able to day trade as much as I'd like. Now, in spite of the ability to trade as much as I like, I focused on quality over quantity, following the rules of the strategy as I already laid it out for you in the first episode in this series, where I shared with you what the game plan would be for how I would trade with.
We watched that together. Definitely make sure to check it out if you haven't seen my reaction on it. Everything was explained perfectly fine and I gave a little of my ideas on that topic as well.
Such a small account. Quality matters. You can't be just shooting at everything that moves. You got to be really focused on taking the best setups. Trade the best, leave the rest. So let's go ahead and jump on the screen share because we have a lot to cover. So there it is. INHD up over 5,000%. But boy, this thing is volatile. It is moving quickly. In fact, this had a low today of, let's pull up our drawing tool. Let's see. So we had a low today of about $1.09 and a high today of, dare I say, $66.
This is crazy.
Wow, 6.6. Well, that's pretty scary for a short seller, that's for sure. I have no doubt that there are short sellers out there that lost millions of dollars today. This is an unexpected move. You didn't see it coming. Well, you never really see them coming, but there was reason to believe that something like this could happen with the influx of volume that we knew was the result of the pattern day trader rule going away. All of a sudden, traders can trade far more than they ever could before. So we're going to talk about this incredible move today, but let's take a look at the top gainer scanner. So this is the scanner that I use every single day to help me understand the strength or weakness of the market. It's sorting the gainers in the market from the leading gainer being at the top. We have 1, 2.
Of course, this is so valuable and a big factor in Ross's success.
2, 3, 4, 5, 6 stocks right now that are up over 100% in the market. At one point, we had 8 stocks that were up over 100%. A few of them have dipped back down. When you've got 8 stocks up over 100%,
I also noticed that move in the Nasdaq, actually. So the Nasdaq dumped on Friday and a lot of people thought, okay, maybe it's gonna dump even more on Monday. But first of all of those big one-way auctions got equalized on Monday. And then I myself actually anticipated at least a test to lower prices, but maybe also because of the fact that so much volume came into the stock market. The Nasdaq was rising as well, and that catched a lot of people, myself included, on the wrong foot at this point. So I had to flip the switch real quick to search for long entries, even though my overall bias was short for that day. Okay, and that probably was a factor as well, that the stock market gained a lot of volume. Okay, that was also pushing the indices higher, even though they were on Friday like limit down.
You've got some serious momentum. So let's pull back on the slide deck, pull back on the charts for a second. We'll jump into the slide deck because, as I said, we've got a lot to cover. So, as you know, I reset my account back down to $2,000, and today was day one of that challenge. And I got to begin this episode with a little update on our fundraising goal. As you know, all of the profits from these small account challenges gets donated to charity, but I gave you guys the opportunity to help me double the amount that I donate, because every time you hit the thumbs up on the episodes in this series, I add an extra dollar to charity.
Again, a good reminder to leave a like real quick. And now let's continue.
So as of right now, we have raised $293,000, just over, thanks to the profits I've made and the thumbs up that you guys have been hitting. And we've got $289,500 currently donated as of right now. So I'm a little bit behind. I've got to catch up. So if you have a recommendation for a children's hospital near and dear to your heart that you would like me to donate to, please feel free to leave it in the comments. My goal is to make a donation to a children's hospital in every single state here in the United States.
And I mean, isn't that the best case scenario? He's such a good trader. Okay, he's doesn't need the profits from those small account challenges. So it's a win-win for everybody. He's donating the money. It's for a good cause. It can't really be better.
This is something that means a lot to me. So thank you guys for hitting the thumbs up and helping make that possible. All right, so day one, it's a hot market. And this, it really did come as a little bit of a surprise, because I'll tell you that pre-market,
I need to close my window really quick. The neighbors downstairs make, again, so much noise. I hate it. Let me close the window for a second. God, can't you just get 5 minutes of quietness in this country? So let's continue.
Things were pretty slow. This morning I sat down at 7 a.m., which is my typical time that I sit down to trade, and we didn't have a lot of action. We ended up having one stock that started to squeeze, and I was willing to trade it in my big account, but I didn't feel like it was good enough to trade in the small account. So I kind of got different quality standards. In the big account, I can take a little bit more risk. If I take a loss, it's not a big deal. In the small account, I can't afford to make mistakes. If I lose $500, the account goes from $2,000 to $1,500, and all of a sudden I can't day trade anymore because
well, okay, then you better make actually, that would be already too much pressure for a normal trader like you and I am. Okay, this would probably already be too much pressure, knowing that if you have a even decent loss, you can't trade anymore.
you need to maintain a minimum balance of $2,000. So I funded it
So he has to start with a win here. Okay, the pressure is on.
with $2,000 and 1 penny, just to make sure I was officially over the $2,000 threshold. So my quality standard was a little bit higher, and as a result, I didn't take any trades during the pre-market session, and I didn't think I was going to take any trades today at all, until, that is, INHD started squeezing. So how did I find INHD moving? So because this stock was moving very quickly, it fired off on my stock scanners for volatility. It was up enough that I was getting the audio alerts. So I was getting the notification from the scanner that this stock was moving higher. I pulled up the stock and I saw that it was moving higher on an agreement here to build AI-powered used mobile phone sales agent. To be honest, that sounds pretty boring. But
Okay, so one of his rules is basically just buying a stock if there's big news, which is obviously the case.
it has an important keyword, which is AI powered. And I guess in this market, that is enough. To be honest, I think that short sellers probably started shorting it early on, didn't expect it to go to 5, didn't expect it to go to 750, and then added heavily when it broke down right here.
And that was a short squeeze.
Because what happened right there was the trend shifted. Here, we're stair-stepping up, gradually moving higher, and here we step down, which is by itself a little bit concerning, and then we make another step lower and another step lower. And so I think shorts got heavy here, and then suddenly it rips up right there and gets halted on a circuit breaker. If you don't know about circuit breakers, I have other episodes that talk exclusively about how they work.
Again, I remind you guys, I'm not a stock trader. I'm actually a futures indices trader. So this is a little new to me, but I'm very interested to open my horizon, to learn as much as I can from the trading industry. This is why I also make those reaction videos, because I can watch so many videos with you together, learn new stuff, improve myself, and maybe catch up one or two things that I could use in my futures trading as well. So I'm always interested to learn new stuff here.
But this halts up on a volatility trading pause. The pause is generated by the exchange, and it halts up at about 760. It resumes at just over $9. It squeezes up to about 11 and halts a second time in a row. It opens, goes up to 12, it dips down, and then rips up to 15. Then it dips down right here and rips up to $20.97.
So where did he buy?
7 cents per share. And when it resumed, as you'll see right here, it ended up resuming and going from $32 all the way up to $44 a share. Then it dips down and squeezes, as you can see here, all the way up to $66 a share, which is the high of day. So, wow, that made a really big move. So how did I trade it? Where did I get in? Let's break it all down.
Yes, please.
Well, guess what? I didn't trade this stock. I didn't trade this stock for a couple reasons. Number one, I missed the move. I missed the majority of the move on this one, and I didn't feel that I could manage risk. The price is also a little too high.
Yeah, actually, this is what I was thinking, okay? If he's not able to get in, let's say here, at some point, you have to control your fear of missing out and thinking, okay, the price already moved so high, I don't know, maybe a reversal is incoming. I don't know if this is the right approach, because the better thing in trading is to hope or bet on a continuation of a movement, okay? So more or less, it's never too high to buy into a trend, because the probability of a trend continuing is always, guys, always higher than the probability of the trend now exactly at this point turning lower, okay? So betting on a continuation is always the better choice. But let's be real, we are all humans, and we know that after big movements, at least a little retracement is overdue for the stock to then go higher again at a certain point. But a retracement is needed at several points. And he is here in a situation where he can't do a mistake. So buying into such a big movement could be really, really dangerous, because like the volatility is so huge that a small retracement immediately loses him several $100, okay? So therefore, it's really dangerous. And I don't know if I would be able to buy a stock that is rising higher, even though it might, on theory, on paper, be the right idea to do that. It's dangerous.
With a small account, I really couldn't buy very many shares with a $2,000 balance. So I felt like this one's going to go without me. I watched it, I was tempted, and I let it go without me. But as you'll notice here on the scan, there were a lot of other stocks moving. And one of them fit well within my risk tolerance. So I was using my halt scanner right here, and this was telling me other stocks that were getting halted. BYAH, TDIC, WTO, and NPT right here. I liked NPT because it had 119 million shares of volume. TDIC had quite a bit of volume, but was too cheap. BYAH, good price. Volume a little lighter. I wasn't sure it was obvious. NPT also met my 5 pillars of stock selection, with the exception.
So he actually was not trading the 5,000% stock. This is interesting, guys. What a plot twist.
That there wasn't a clear catalyst, but that it was trading on sympathy to the other stock that was making a big move. And so I saw it hitting my scanners and squeezing up. I pulled up the chart and I recognized an opportunity right here to buy the first pullback. If you watch the earlier episodes in this series, you know that this is one of my favorite setups that I told you I'd be trading. One candle up, sometimes 2, sometimes 3, sometimes 5, but eventually a pullback. Let it dip down. And right here, I'm a buyer if this next candle crosses this level right here. We call it a crossing candle. The first candle to make a new high is crossing the high of the previous candle. So I'm a buyer right there. If this candle goes green, I'm in the moment it breaks. I don't wait for the candle to close, because by the time the candle closes, the price could be way up here. The moment it breaks, I am a buyer. In this case, in this example, we get a second red candle. So now I'm looking at the next candle, and if it breaks this high right here, including the top of the candle wick, this isn't drawn perfectly, but that's the crossing candle. That's the entry for candle over candle, and that's where I'm a buyer right there. So if we pull back our example, this was where I was a buyer right in there. That's where I got in. Look at the volume profile. Nice volume on the buying, light volume on the selling. The MACD was open. This all looks good. We got a nice pullback. So I took my entry right here, buying, as it turned out, 237 shares. I was all in. I put all my cards on the table.
He's all in immediately, knowing that he's not able to make a mistake. Crazy.
All my chips on the table. This is all that I could afford. That was my full balance for the account. And I got filled at
I don't know if he's streaming live for his Warrior Trading members, but seeing such an execution live, that would be like the best trading video ever. Okay. Talking about in hindsight has its advantages, because then he can analyze what he did and why he did that in a little bit more chill environment. But seeing this execution live, that would be so interesting.
$8.
So if you know if he's any chance trading live for his members, write down in the comments below.
29 cents, with the remaining 9 shares getting filled at $8.32. Within less than a minute, it squeezed up and I sold at $10.
Crazy.
And 4 cents, as you can see right here, locking up a profit, which you'll see in just a moment. So this was the trade from right there to right there. Picture perfect, beautiful, precision, surgical. Just one entry, one exit. That was it. Now it shows technically two fills, but it was one order to buy that filled in 2 little blocks and one order to sell. This gave me a profit of $416.22, minus a little bit of the fees that Thinkorswim charges, or
so a 20% gain on an account in one trade, guys.
I say Charles Schwab, and I'm up $416.13 here in my account today. The account's up 20% in one day. Not bad. That's good work. Now, I only took one trade. I thought about getting back in. And as I thought about getting back in, I reminded myself that what's more important is to build consistency. Usually it's the first couple of trades that are the best, and then you start to push it, and I can't afford to make a mistake. Now, I've done a lot of small account challenges, and some of you have seen me have a great trade on the first trade. I take a second, and I go red on the day, and I'm furious. I'm disappointed in myself. Why didn't I take the profit off the table? So let me give you a little recommended reading right here. Annie Duke, quit.
Actually, let me show you something. Blah, blah, blah. Here it is. I read the book. To be honest, it didn't help me much with my trading, but for life advice in general, it's a great book. I would recommend it. I make some notes here on the quotes that are most important to me, or some little summaries that I want to remember. And this is a great book. I read it. I don't know if I catch it on some of Ross videos or somewhere else. I can't remember. It's a while back that I read it, but great book.
The power of knowing when to walk away. It's better to walk away, leaving perhaps some money on the table, than to give back profit, especially when you're in a small account.
This might be a little controversial. My rule in trading is always that protecting your capital is more important than making money. Protecting your capital should be the #1 rule ever. I know that I told you a couple of times that moving your stop loss to break even too fast is dangerous, because the market tends to retrace a lot of times, even the slightest bit, before going higher. So there are big chances that you get stopped out at break even. But if this is your way of protecting your capital, then it might be the right choice, okay? But be careful with that. But #1 rule should be to not lose. And then you can try to make some money.
And you just don't have that margin to make those kind of mistakes. So today's a great day. The account's up 20%. I'm feeling good. And for those of you guys who have been tuning in, it doesn't stop here. I want you guys to check out the link for the 2-week trial. It is pinned to the top of the comments. It is posted in the description, and it gives you the chance.
Okay, because I'm reacting, I'm letting the advertisement run here.
To watch over my shoulder as I'm trading. Now, in full
So he's trading live.
disclosure, for this trade, I took it all by myself. I wasn't streaming when I took this particular trade. Now I was streaming all morning. But this afternoon, I came on and I took this trade on my own. I saw the
So he is streaming live. Okay, good to know that.
setup, it looked good, and I executed. Now, I don't think that's going to be very common. In fact, it is pretty rare for me to trade in the afternoon. Typically, I'm trading between 7 a.m. and 9 a.m. It just so happened today that we had this picture perfect opportunity. It was an opportunity, it was a window, and I felt that I had to execute on it. Now, during the afternoons, I've got our mentor, John, who's got his $1.5 million badge, and he's streaming, providing the market commentary. So I didn't want to step on his toes. So members are getting education throughout the whole day. So if you haven't already checked out the 2-week trial, I hope you do.
Okay, so that was a great video. Finally, we saw some trading here. 20% in one day. Crazy. It was the first episode of this new small account challenge. Thank you guys for watching. Hopefully you enjoyed it as well. Hopefully I could add some valuable thoughts of mine. And then we're gonna see us in the next episode. Take care of yourself, guys. I wish you the best of luck with trading this week. Do remember to leave a sub and a like down below. That helps me a lot. Thank you, guys. Take care of yourself. Bye bye.